Hello, welcome to Venture Capital. Coming up this week, the IMF issues repeated warnings about ultra-low interest rates and risky business. We also discuss China, metal prices, trucks, pay rises, and there's an oligarch in the mix too, so do not move a muscle. But first of all, the world could be about to enter a new financial crisis. This is the latest warning from the IMF, and the threat stems from global central banks encouraging excessive risk-taking in the markets. Now, more than half a decade in of these ultra-low borrowing costs, well, it's encouraged speculation rather than the desired pickup in investment. And the fund also warned that economic growth may never return to pre-crisis levels. Now, the fund outlined three main risks: as complacency, as well as global tension between Russia and Ukraine and in the Middle East as well. And thirdly, the risk that a triple-dip recession in the Eurozone could lead to deflation. So let's talk about all of that. We're going to be talking to James Meadway from New Economics, joining us from London today. OK, James, so what is the basis of the problem with the financial system at the moment?
Well, the basis of the problem remains much the same as it has done for some period of time, and really much the same as it was right up until the crash, which is there's just far too much debt out there. And that's now combined with something the IMF has highlighted, which is a lack of growth. Now, what they're also saying is that very low interest rates, rather than encouraging investment in productive activity, is perhaps starting to encourage investment or speculation in financial activity. So there's this process of debt creation, or basically gambling by financial speculators, that low interest rates has G'd up. And
from what I understand from the IMF report, they're saying that it's not a problem with capital in the traditional banks now. It's more these hedge funds, the shadow banking system. Can you shed some light on that for me?
Well, the shadow banking system is what developed over the 2000s. This is all the off-balance sheet activity, all the stuff that the banks don't want to put, banks and large financial institutions don't want to put on their balance sheets, where it's kind of monitored and registered and all the rest of it. So they do all these activities. They're quite mysterious, often quite opaque. They call it financial innovation. Really, it's a way of trying to sort of spin money and spin credit almost out of nothing. So you have this shadow banking system, which is now very, very large, particularly in the US. It's absolutely enormous in the US, less so in the UK, but large in relation to GDP. So it's a lot of off-balance sheet activity. It's less well regulated. That's the whole point of this sort of thing. It's out of sight of regulators, of governments, and it's brewing away. It's one of the things that helped make the crisis of 2008 so severe. There was a collapse of the shadow banking system, this off-balance sheet, unregulated activity, which then fed back into the main banking system and brought everything else down.
And James, actually, in the IMF report, one of the problems that they cited was this complacency. And I would say that that is one of the main problems. Would you agree?
Yes, I think so. I think, again, talking about the UK, you have a government here which is taking the IMF report and saying, oh, this means everything's fine. You know, we've got good growth forecasts for Britain this year, finishing this year and going into next year. We're doing much better than everyone else. Well, if you look underneath the headline figures, and not just the IMF, the Geneva report, there are other places picking up on this, that what you see happening in Britain especially is a return to conditions that led to the crash last time round. So if the government's sitting there and saying everything's fine, it's likely to prove to be seriously unfounded optimism on their part.
And also another cited problem was the fact that we could have an escalation in global tensions. That was something that wasn't necessarily a feature in 2008. And now that it is, I would imagine a second financial crisis, or a third or a fourth, if you look at the history books, would potentially be even worse.
Well, it's possible. It's difficult to say this side of anything happening how a financial crisis would interact with these kind of ratcheting up of global tensions, though, of course, the global tensions do play their part in it. Tension between Russia and Germany has been blamed by many in Germany for the slowdown there recently. So you can see how these tensions start to fit into the general pattern of a kind of gloss of some prosperity in some parts of the world, perhaps central London, where I'm sitting now, perhaps bits of the US, but a general pattern pattern of decline and a repeat of many of the serious issues that got us into the mess last time round.
It's very cyclical, the situation, isn't it?
Yes, that's exactly it. There's a kind of process where we've gone through a very, very large credit cycle where you have an enormous build-up of debt and of credit, which then falls over itself. You can't repay. Lots of people can't repay. That's what drives 2008. Now, what should happen afterwards is a clearing out of that debt. That hasn't happened, and that doesn't bode well for the future. It means that we're still sitting with all this debt. It hasn't been repaid. It hasn't been cancelled, and it's still sitting, bearing down on the world economy, and it's still going to turn into a problem for us at some point in the future.
OK, James Meadway from New Economics Foundation. Thank you for joining us from London today. Very much appreciated. There was some good news for China from the IMF. In terms of purchasing power, China is already overtaking the US as the world's biggest economy. Now, in 2014, China reached 17.6 trillion, or 16.5% of the world's purchasing power adjusted GDP. While we've got the US just here, slightly behind on 17.4. Now, one must-have for the future of the world's biggest economy is an internationally used currency. And interestingly, Britain is in the process of issuing a government bond denominated in the Chinese renminbi. Now, this reinforces the fact that the offshore market for the Chinese currency is developing, and it's already jumped into the top 10 of the world's most used currencies. And Britain is eager to become the Western hub for the RMB. So now, moving on, one of the industries most affected in the wake of the financial crisis was the metals industry. Now, mostly affected because of the slowdown that then took hold in the emerging economies, especially China, actually, which was fueled, it was fueling the demand pre-crash. So that was the problem. But Russia's steelmaker Severstal, as an exporter, is managing to benefit right now from a cheaper ruble. We'll be able to see that it's experiencing right now a modest resurgence just here. Now, I spoke to the Russian billionaire CEO, Alexei Mordashov, about this currency impact.
Of course, it gives depreciation of ruble gives advantages to the national exporters, like steel industry, which is substantially set off by the necessity to serve the debt, which is denominated very often in hard currency, in a foreign currency, which is seriously the case. We have, thanks God, very low debt now, but I think the situation might be diverse for different companies, and companies who have substantial debt denominated in foreign currency may have not so strong advantages from the depreciation. But coming back to your question, straightforward, we have significant advantages which boosted our economics of our companies because of the change of exchange rate.
And what would be your plan B if Severstal is sanctioned?
I don't feel any short-term negative impact of sanctions, neither for Severstal nor for Russian economy yet. It seems to me that biggest impact of sanctions so far, practical impact, is growing anxiety of economic players, which definitely is very, very important economic factor for sure, but just by itself, immediate impact of sanctions is, in my view, still very, very minor. I do believe, like many others, that long-term it has a very significant risk of deterioration of business climate in our country because of undermined trust of foreign investors and, in general, investors in Russian economy, which is very, very important potential outcome of the sanctions, for sure.
All right, time for corporate news now then. And talking to metals, a merger offer that would have created the world's largest mining company fell through this week. Mining giant Glencore's $160 billion merger was rejected by Anglo-Australian mining group Rio Tinto. Glencore is reportedly now targeting Aluminium Corporation of China's 9.8% stake in Rio. Gas Gazprom will acquire Europe's largest underground gas storage facility this autumn from Germany's BASF. This is a continuation of the development of the company's Nord Stream operations. In return, the Germans will get access to large gas reserves in western Siberia. Russia's second-largest airline, Transaero, is closing down 17 routes. These include flights from Moscow to Iceland and from St. Petersburg to Zurich. Transaero is also raising ticket prices by up to 15% on all destinations, partly due to the weak ruble. But surprisingly, the company saw a 61% net profit jump in the first half of the year. Lukoil has begun to restart a refinery in Romania after authorities in the country lifted a freeze on its assets and activity. Russia's second-largest crude producer has been embroiled in a tax evasion case, but it seems it's back to business. Right, it's time to get over to the business desk and see Tim Kirby, and I can see you bright and clear, which means I guess you lost money, right?
Yeah, that was the deal from last week that you set up, that if I lost a lot of money, I'd have to wear some sort of costume, and I am.
Oh,
and,
you
yeah,
look
I
good.
lost. Yeah, well, thank you. Wearing the uniform of the guys who fix the tram and trolley tracks around Moscow is very macho, but doesn't look too good next to a colorful wheel in the RT office. But anyways, how much money did I lose? A lot.
Kamaz. How much?
Yeah, the Kamaz, the mega trucks, the trucks that win the Dakar rally race through all those countries in the desert. Every year went down 3%. I lost $900. But we're still far ahead. We're still far ahead. And to be honest, Katie, you have made me look silly on television, so I'm calling it in. For weeks, I have wanted to stop this madness of the wheel. We are so far ahead, we've got to stop it. We're starting a Twitter campaign. It's hashtag pay Tim his dues. I'm flat broke. We're thousands and thousands of dollars ahead. We've got to stop this wheel thing and cash out. We've got to cash out, Katie.
All right, we've got to cash out. We'll get spinning and we'll see what we can do, all right?
All right, well, let's see. Hopefully not Kamaz.
Yeah, maybe not. Although you've got the right kind of outfit to be driving a truck.
Well, actually, technically, yeah, I probably would look good behind the wheel of a Kamaz, but then again, I'd look good in any outfit.
Oh,
and we have
something else bright.
Polymetal, who procure a lot of gold and silver. Maybe gold will be more reliable than massive trucks.
Yeah, it's a solid asset, gold, safe haven. You might be doing well on that one.
Hey, I'm shiny enough myself today. These are actually reflective. So we'll see next week if Polymetal pays off.
Indeed. And you are still up about 130%. So I am thinking a bit of a pay rise for Tim Kirby is in order.
Please do it. Please,
all
I'm
right,
flat
we'll
broke,
see how
Katie.
you get on.
See you next week.
Well, of course, that involves asking the boss. Quite a daunting thought indeed. Well, one that Wells Fargo employee Tyrell Oates wasn't afraid of, though, and asked the CEO, John Stubbs. He sent an email to his chief and copied in thousands of colleagues in to fight his cause, citing income inequality. Now, Oates proposed a $10,000 raise for all employees, and he wrote that that would show the world big corporations can have a heart other than philanthropic endeavours. So there we are. Thank you very much indeed for joining me today. And you know what? I could do with a pay rise. I work really hard, don't I? I do a lot of research. See you next week, and I'll see you in Twitter in the meantime. Goodbye.